Assalamu alaikum. Previously, we had discussed how conventional banks' balance sheets involve riba on both sides of their balance sheet, that is, the liability side as well as the asset side. Now, let's see how Islamic banking balance sheet differs from conventional banks' balance sheet, and how do Islamic banks' balance sheets do not involve riba either on the liability side or the asset side. Primarily, Islamic banks are not money borrowers or lenders. This is because they do not use the contract of loan for earning income. So they do not use the contract of loan either on the liability side or the asset side. They use the contracts of partnership and equity on the liability side of the balance sheet. And on the asset side, they use different contracts, for example, sale-based contracts, lease-based contracts, partnership-based contracts, and other trade-related contracts. Now let's see how an Islamic bank's balance sheet looks like. Like all balance sheets, an Islamic bank's balance sheet has a liabilities or sources of fund side and an asset side. On the liability side of the balance sheet, Islamic Bank performs the function of accumulating funds from the economy or from the society, which is one of the primary function of the financial intermediation function. So financial intermediation involves accumulation of funds and then deployment of those funds. So an Islamic bank accumulates funds on the liability side, which is, you can say, is the sources of fund side. On the liability side, Islamic banks offer different products. For example, Mudarba savings accounts, current accounts, Mudarba fixed deposits, interbank wakala, and other products, which may differ from bank to bank and from country to country. On the deposits, if you look at the deposit products, for example, the Mudarba savings account, the Mudarba savings account in an Islamic bank does not function under the contract of loan. While we saw that in a conventional bank, when a customer opens a saving account in a conventional bank, the bank and the customer enter into a loan contract. All the deposits that the customer makes in the savings account is actually a loan from the customer to the bank. But this is not the case in case of an Islamic bank. Whenever a customer opens a savings account in an Islamic bank, the bank and the customer enter into a Mudarba partnership-based contract. So Mudarba is a special kind of partnership in which one partner, that is the customer, gives the funds, and the manager or the Mudarib, which is the bank, deploys those funds in business activities to generate profits. The profits that are earned from this contract or this activity are then shared between the provider of funds, which is the customer, and the bank, who is the manager or the mudarib of the business. So when a customer opens an account, a savings account in an Islamic bank, in most cases, it is a mudarba-based contract, due to which the customer is the provider of the funds and the bank is the user of the funds or the deployer of the funds. Whatever the profits that the business earns are shared between the bank and the customer. So it's not a contract of loan. The principal amount or the investment of the customer is not guaranteed. Neither are the profits guaranteed. And there is also a possibility of loss. In case the business makes a loss, the loss has to be passed on to the customer. So when entering into a savings account or opening a savings account, the customer enters into a Mudarba contract with the Islamic bank. Now, since it is a Mudarba contract, any profits earned through the Mudarba business under a Mudarba contract are considered as permissible profit in Sharia and do not constitute riba. Next, we come to current accounts. Now, just like in a conventional bank, the current accounts in an Islamic bank are also based on the contract of qard. However, since Islamic banks do not pay any profit on the current accounts, the dealing in such qard, that is opening of accounts, giving of qard by the customer or loan by the customer to the bank, and bank using it in its business, is perfectly acceptable and permissible in terms of Sharia. Since there is no profit being earned, there is no question of riba arising in such products or in current accounts. Next product is the Mudarba fixed deposit. Mudarba fixed deposit is again a fixed tenor product or a fixed tenor deposit by the customer to the bank. That is, the customer is entering into a Mudarba contract with the bank for a fixed limited tenor. So that tenor can be from 1 month, 2 months, 1 year, 5 years, or whatever the period as agreed between the bank and the customer or as per the bank's policy. So it's a fixed tenor mudarba contract between the bank and the customer. Under the contract, customer deploys his funds or invests his funds in the business of the bank, and the bank as mudarib manager uses those funds for its business. Any profits earned are shared between the bank and the customer. In case losses are incurred, the losses will have to be passed on to the customer. So this is again a product which is not based on the contract of qard. The profits are not guaranteed. Even the principal is not guaranteed. The profits will vary and vary in practice as well. And the principal of the customer is not guaranteed. So there is a chance of loss as well in case the business of the bank or the general pool in which the mudarba funds are invested makes a loss. So the loss, there is a possibility of loss being passed on to the customer. Again, since this contract involves a contract of mudarba and not a contract of loan, any profits earned through this contract are perfectly permissible and acceptable in terms of Sharia and do not constitute riba. Another product or arrangement that Islamic banks enter into is interbank wakala. We saw while discussing the conventional banks balance sheet that conventional banks, when they are short of funds, they go into the market and they borrow from other banks. That is called interbank lending. But in case of Islamic banks use the contract of wakala to acquire the funds in case they are short of funds at any point in time. So what Islamic banks will do when they are short of funds, they will approach other Islamic banks or conventional banks and ask them to provide them funding under the contract of wakala. Wakala is a contract in which one party appoints the other party to invest its funds in a specified business, and when the profits are earned, the profits are passed on to the investor party. So a bank which has excess funds will enter into a wakala contract with the bank which is short of funds. The excess bank will provide the funding or the investment under the wakala contract, and the bank which requires the funds will receive those funds and place it in its business. Any profits earned are passed on to the investor bank. In case losses are earned, the losses will have to be passed to the investor bank. So again, this arrangement also involves a wakala contract, which is perfectly permissible in terms of Sharia. Any profits earned under the wakala contract are acceptable and permissible and do not constitute riba. Now, at the same time, while the funds are being mobilized through the mudarba contract and on the liabilities or the sources of fund side, those funds are also being deployed from time to time on the asset side, which is the business earning side of the bank. Any profits that are earned on this side are then passed on to the depositors under the mudarba partnership contract. So how does the bank provide financing or book its earning assets on the asset side of the balance sheet? Remember that in the conventional banking, we saw that the conventional banks use the contract of loan to book assets, which is long-term loan, short-term loan, trade loans, consumer loans, credit cards. All these loans-based products are booked by conventional banks, and any return or any profit they charge to the customers on those loan contracts, of course, become riba. Now, what is the difference, or what is the different thing that Islamic banks are doing? Now, on the asset side, Islamic banks, when a customer approaches an Islamic bank and he wants financing for, say, property, plant, and machinery, Islamic banks will not give him long-term loan. In fact, Islamic banks will purchase that asset or get that asset constructed and then lease or rent out that asset to the customer. Any rentals that are paid by the customer are the income of the bank and become part of the overall income of the Islamic bank. Similarly, any customer who wants short-term financing, for example, he wants to purchase raw material like cotton, rice, or any other commodity, the Islamic bank will not give him short-term loan just like a conventional bank. But what will Islamic bank do? Islamic bank will go into the market and purchase that asset, either the cotton or the rice or any other commodity, and then sell that asset to the customer on 6-month credit basis or 1-year credit basis for a profit. If the bank purchases the cotton for, say, $50,000, Islamic bank will sell that cotton to the customer on murabaha sale basis at $55,000 at 6 months credit. So $5,000 will be the profit of the Islamic bank and will become part of the overall income of the Islamic bank. Similarly, in case of import muraba, if a customer wants to import something, Islamic banks will import those goods in their ownership. And once those goods are imported, those goods are sold to the customer on murabaha basis for, say, again 6 months or 1 year or more credit basis. Any profits earned through that become the income of the bank. Similarly, if someone wants construction finance for his factory, plant, machinery, or any other project, the Islamic banks, what they will do, they will not again give a long-term loan, but get the asset constructed together with the customer in their ownership or joint ownership with the customer through the contract of istisna from a third party. So they will appoint a contractor, get the project constructed together with the customer, and then once the project is constructed and completed, the asset or the project is then leased out to the customer. Any rents that the customer pays in that becomes the income of the Islamic bank. On the consumer financing side, if a customer wants housing finance, Islamic banks will not give a housing loan, but in fact purchase the house that the customer requires and then lease that house to the customer or lease that apartment to the customer. Any rents that the customer pays in that become the income of the bank. In case of auto financing or car financing, Islamic banks will not give a car loan or auto loan to the customer. Islamic banks will purchase the car that the customer desires from the dealer and then sell that car to the customer on installment basis. These installments can be for a period of 3 years, 5 years, 6 years, whatever the arrangement is agreed between the bank and the customer. So the customer becomes the owner of the car and he pays the selling price of the car in installments to the bank. The profit earned through this transaction is part of the overall income of the bank. In case of consumer goods, now Islamic banks will not give a consumer loan. If some customer wants to purchase furniture or any other consumer good, Islamic banks will again not give a consumer loan. Islamic banks will purchase that asset or that furniture and sell it to the customer, similarly in an installment basis. So this is the way Islamic banks perform their function or the function of financial intermediation, whether it is the collection of funds or the deployment of funds. We have seen that they do not use the contract of loan on either side of the balance sheet, either on the liability side or on the asset side. So if they use the contract of loan, then as per Sharia, they cannot charge or give any profits to their customers. Therefore, Islamic banks use different contracts to perform the function of financial intermediation. On the liability side, it is primarily the contract of mudaraba. And on the asset side, there are a host of contracts which they use, for example, ijara, diminishing musharaka, murabaha, and other such contracts. I hope this discussion was useful. If you have any questions or comments, you can mention those. Jazakallahu khair. Assalamu alaikum.